Good day, everyone, and thank you for joining us on Greenply Industries Q1 FY19 earnings call. We have with us today Mr. Rajesh Mittal, the Managing Director, and Mr. V. Venkatramani, the CFO of the company. Before we begin, I would like to state that some of the statements made in today's discussions may be forward-looking in nature and may involve risks and uncertainties. A detailed statement in this regard is available in the result presentation that was sent to you earlier. I would now like to invite Mr. Rajesh Mittal to begin proceedings of the call. Over to you, sir.
Yeah. Thank you, Rishabh. Our friends, a very warm welcome to everyone present, and thank you very much for joining us today to discuss the Greenply's operating and financial performance Q1 of this financial year. Friend, I will talk briefly about the performance of our business before passing it to Mr. Venkatramani. So friends, our plywood business, in fact, has grown around 20.8% to 3.06 to 3.306 crores. Compared to last quarter, the same thing was 253 crores. The implementation of e-way bill system is steadily leading to the shift from unorganized to the branded product. However, our MDF sales have fallen by 30%. This is primarily due to the steep reduction in the prices by our competitors. However, we have introduced some dealers scheme and have taken some measures, some measures like price cuts and some incentive schemes to the dealers in the month of August to reduce our price differential with the competitions. Gross margin were lower by 280 basis points, primarily due to the fall in the MDF volumes and the losses incurred in the wallpaper and other category. I would now hand over to Mr. Venkatramani to give the financial numbers. Thank you.
Good afternoon, friends. I thank you for joining us to discuss the Q1 FY19 financial performance of Greenply Industries. Our top line was up by 2.4% compared to the year-on-year quarter. Plywood sales increased by 20.8%, while our MDF business recorded a steep degrowth of 30.1%. Our gross margins fell by 280 basis points year-on-year to 45.1% due to a significant fall in MDF revenues, which has a higher gross margin, and losses in the wallpaper segment. Average realizations in plywood were lower by rupees 7 per square meter at rupees 220 compared to 227 in the corresponding quarter. MDF realizations were down by about 3.8% at rupees 25,131 per cubic meter compared to 26,115 per cubic meter in the corresponding year-on-year quarter. EBITDA margins for the quarter were down by 250 basis points at 12%, primarily due to reduction in gross margins and losses in wallpaper. Capacity utilizations in the quarter were 109% for the plywood segment and 79% for the MDF segment. Profit after tax was down by 22.2% at rupees 23.82 crores compared to rupees 30.63 crores in the corresponding quarter. The capex incurred during the quarter amounted to rupees 65 crores, comprising of rupees 52 crores for the Andhra MDF unit, 6 crores for the UP unit, and rupees 7 crores for the Gujarat decorative veneers unit. Our capex spend is estimated at rupees 65 crores for the balance 9 months of the current year. We are in the process of expanding our log spilling capacity at Gabon from 36,000 to 96,000 cubic meters. Our working capital turnover days has increased to 79 days, owing to an increase of 12 days in inventories and reduction of 9 days in creditors. Our net debt to equity currently stands at 0.77 compared to 0.62 in the corresponding quarter. That concludes my presentation. I would now request you to open the floor for the Q&A session. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Mithun Bhasin from Ambit Capital. Please go ahead.
Good afternoon, sirs. So, 2-3 questions. One, if I look at the expenses, you share that the A&P expense on ply, it is, or on the whole company, is about 4.7%. A&P is not spent that much on the MDF. It is largely spent on the ply, which translates to 6% on the ply sales. Is it like a new normal, that 6% on ply sales? And how should one look at it? And I'm tying this to the comment Mr. Mittal made in the beginning. He said that we are finally gaining over the unorganized guys. So if you could help us first in this first question about A&P and the gain over unorganized.
Okay. I would say that the first quarter was slightly on the higher side in terms of A&P expenses. And I would expect the A&P expenses to be around 3.5 to 4% for the full year.
Okay, okay. And is it largely only for ply only, sir? Am I right?
No. Although, we do the electronic media ad only for plywood, but we also have A&P spends for MDF, although most of it is of the BTL category. So we spend on wall paintings, shop displays, signboards, and a lot of activities for carpenters and contractors. BTL activities. Yeah.
So basically for everybody. So you're saying for the whole year we should look at about 3.5 to 4% between that number.
That's right.
Okay. And in terms of gain over unorganized, in terms of ply market?
So we are targeting a top-line growth of about 12 to 15% for the plywood business during the current year.
Okay. But sir, what exactly has happened? Because last year was a very muted year in terms of ply growth. I'm just trying to understand that sudden growth of 20% over an unorganized. What's happening? Are they shutting shop or you are cutting prices? What's the reason?
No, we have not cut prices in plywood, although there has been a reduction in the average realization because of fall in the sales of decorative veneers, which has a significantly higher realization compared to the normal plywood. But like Mr. Mittal mentioned at the beginning of the call that, we are seeing a significant improvement in demand with the implementation of the e-way bill system, and this is probably only the start. I think I'm not very optimistic about the current year that we are going to a significant shift from unorganized to branded. But over the next 2 years, we are optimistic that we'll see a significant shift happening from unorganized to branded.
So this is largely only market growth. Sorry, sir, you were saying something. Apologies.
Yeah, I'm Rajesh here. Actually, this e-way bill and from unorganized to organized, the real picture of the e-way bill will be looking after. It will take another 2 to 3 quarters to feel it exactly right. What is the impact of that? But the initial Q1, we have seen a little bit changes in that. Because the branded product or full bill materials requirement is little bit increased. Okay. One thing. Number 2, we are seeing at a growth as what we introduced a lower end plywood also to segment the lower segment of the plywood. Okay. So we are seeing some growth from that category as well.
Okay. The second question would be, very simply on why the sudden drop in MDF sales? Is corporate activity poor or competition has come in and has actually taken up market share from you?
Okay. So there have been significant price cuts by competition starting from February 2018. I think that's why MDF volumes have taken a significant hit during the fourth quarter of FY18 and the current quarter. So we had introduced some schemes during the first quarter, but again, competition responded with fresh schemes and price cuts, which had a negative impact on our volume. So we are reviewing our pricing strategy, and we have taken some further price cuts in August, which we hope will help us to improve our volumes during the remaining part of the current year.
So because the new capacities will come in during this year, how should one look at this MDF? Will it be not? What could you actually target? What is the guidance from you?
Okay, so our new plant has started commercial production on 1st July, and we are targeting a top line of about 700 crores from MDF compared to the 470 crores of MDF revenue we did in FY18.
Okay. With 20% down first quarter is possible, sir?
Excuse me?
So with down already in this particular quarter, are we comfortable to maintain that outlook?
I think it's too early to take a negative outlook just because of one bad quarter. So we'll review the numbers after the end of the second quarter.
Okay.
And one more in this matter. Actually, when there is reduction in the prices, the trade inventory becomes low. Okay. So the traders try to reduce the inventory, whatever they are maintaining.
Yeah.
This is also one of the factors playing here at this moment.
Why inventory increase, sir? That's my last question. Why has the inventory increased in the working capital for you right now? Is it because that the ply sales have been, because of ply sales? What's happening in the inventory?
There has been any significant increase in plywood inventory. Most of the inventory increase has happened in the MDF, where we had to increase inventories because testing processes were happening at the new plant, and we could not stop that process just because there was a shortage of orders.
Okay. So thanks a lot. I'll come back in the queue.
Sure. Thank you.
Thank you. The next question is from the line of Sriram Rajaram from Sundaram Mutual Fund. Please go ahead.
Sir, thanks for taking my question. So, sir, last quarter, as far as the MDF segment is concerned, we saw the EBITDA margin of 30%. Now it is down to 22%. Sir, where do we go from here? I could see that your realizations are at 25,000. What is the price action are you going to take to improve the volume? So, how that will impact the margins? And one more thing which I want to know is how are we faced in respect of competition, how is the pricing currently? Are we priced more than Century and Action? How are we placed in that aspect?
Okay, so during the past quarter, we were almost at 8 to 9% premium compared to competition. Although we had introduced some schemes, volume-based schemes for the dealers, those did not really take off because of continuous price cuts by competition. So dealers, were keeping inventories at very low levels. But yes, like I mentioned, we will be taking some price cuts. We have taken some price cuts in the current month, and we expect that to have a significant impact on your volumes going forward. And we are targeting EBITDA margin of about 24% for the existing plant and about 14% for the new plant for FY19, which would give us a blended margin of about 19 to 21% for the full year.
And sir, this new plant, so how many volumes are expected in the first year? It's operational from July, right? So
yeah, it's operational from July, and it's not just a question of how much volumes we can produce, because producing volumes will depend on the order flow, and at this point of time I am unable to give you the breakup of how much volumes will be doing from the existing plant and how much from the new plant, because that will depend upon the regional flow of orders. Like most of our sales to the southern and western zones will happen from the new plant, and those for the north and the east will happen from the existing plant. So flow of orders will determine the production volumes at both the plants. But overall, we are targeting volumes of about 320,000 to 340,000 for the current fiscal.
Sir, and one more thing, this price action which you have taken, how much is that? What will be the reduction in price as far as Q1 numbers are concerned? We are 25, right? So, sir, how much, 10% cut? Is that what we can expect?
I would think about somewhere in the range of about 8 to 10%.
And how is action placed, sir, in the market?
So, once we have taken this price cuts, we will be almost on par with Century in action. Maybe 0.5% here or there.
Yeah, fine, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Nehal Shah from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, on the plywood side, basically just want to know the product mix. So, as in what has been the growth rate in the low-end segment and in the Ecotech segment versus the premium segment for the quarter?
Okay. So, like overall, we had a volume growth of 24% in the plywood segment.
Yeah.
And of this, about 33.7% came from the mid-segment and the lower segment.
Okay. So it really testifies that the market share gain has happened, particularly in the low end and the Ecotech segment.
I won't say that because, we have had significant gains in the premium segment also. Volume growth in the premium segment has been close to 19%. So, yes, volume growth has been higher in the mid-segment and the lower segment. But even the premium segment has seen a significant improvement in volumes.
That's what is pretty surprising. So, particularly if you look at the premium segment, there's hardly any opportunity as far as shift from unorganized to organized is concerned. Despite that, the fact that we have grown at 19%, is that to do a lot with the changes in the real estate cycle or something? Because that's, or in other way, the existing inventories in the real estate are sliding downwards.
I don't think we have seen any significant improvement in real estate.
In fact, last year quarter one was not that great because of for the pre-quarter for the GST. Okay.
Right.
We cannot really compare with the last year quarter one versus this quarter. Actually, the quarter two will say exactly what is the situation.
Correct. Fair enough. And so my second thing is plywood margins. Now, plywood margins again has been very, very good, along with the improvement in volumes. So, whether that is because of the Okume versus the Gurjan phase, or it's a mix of that as well as the operating leverage?
You can say it is a mix, basically because of we have changed our phase veneer from Gurjan to Okume.
Right.
And that is that has played a very significant role in improving the margin.
Okay. And sir, my last question is, Venkatji, what would be the tax rate going forward for the entire year?
I would say probably at the company level, we would be having a tax rate of about 27-28%. Although we could have two entities by the end of the year with different tax rates.
Mm-hmm.
But yes, at this point of time, I think an average tax rate of 27 to 28% for the full year.
Perfect, sir. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Sneha Talreja from Edelweiss. Please go ahead.
Yeah, hi, sir. Good afternoon. Rohan here. Sir, on this MDF segment itself, like in earlier also, you have given the higher schemes and then competition has counter offered that to take away that benefit, and now you have cut the prices by almost 8 to 9%. So now you have aligned with those competition. So what is the comfort level that the competition will not come with any aggressive policy further from here, or they will not counter attack that our current policy of reduction in prices and prices will remain here?
I think, that competition has very small ground in terms of further cut in prices. I don't think the EBITDA margins were very good in the first quarter that competitors would have scope for further cut in prices. Whereas our EBITDA margins are still reasonably, higher as compared to other competitors. So we will have to wait and watch how the situation moves ahead. But I think we are almost at the end of the pricing cycle. There's not significant room for price cuts by competition.
So you see that at 24% EBITDA margins on the old plant, which you are saying that will be the new normal for us, and now probably the pricing premium which company was enjoying Green over the other players may not be the norm now. So the top 2 or top 3 players will have a similar pricing in the market, and EBITDA margin for each and every one will be in the same range of 24% roughly. Is that a correct understanding?
It would be the same range, because not all of us would have the same costs and the same operational leverage. So it would be different for different entities. But yes, I agree with you that pricing will be more or less on par with competition.
Okay. So just a second question on plywood. So as you mentioned that definitely there is some benefit you are seeing coming from unorganized to organized. So surprising because we still see that probably other players have yet not benefited from this kind of move. So any particular thing done especially by the company, or you see that sooner or later all the players will start seeing the benefit of this unorganized to organized?
Actually, this e-way before the GST implemented last July only, but the 9 months there was no e-way bill was implemented. From 1st of April they have implemented e-way bill, correct? So I am seeing personally there is some benefit of because of e-bill to the branded people, whether it is a premium product or the medium segments. So I am seeing some changes in the buying pattern by the dealers because of the e-way bill.
I think going forward, most of the branded plywood players would see the benefits of the shift happening from unorganized to organized. But maybe not a significant shift happening during the current year.
Mm-hmm. So any idea on the growth of the industry for the plywood, including the unorganized part?
No, we have no numbers on the industry.
Okay. Thanks a lot for taking my question. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ashish Poddar from Anand Rathi Securities. Please go ahead.
Yeah, good afternoon, sir. My question is on the plywood margins. So in the first quarter, we had 11.3% margin vis-a-vis 10% reported in FY18. Do you think that this 11% plus kind of margin is sustainable for the whole of the year?
Yeah, I think so. Unless we see a significant drop in volumes, we should be able to maintain the margins.
Okay. My second question is in your annual report, you highlighted that you wanted to enter into the acrylic solid surface sheets. If you can throw some light, how big is this opportunity and in what stage you are in this business?
Actually, this acrylic solid surface, which normally is known as the solid surface material in the market, very small quantity we are doing, and this 100% trading model is not we are not going to produce anything. It is simple trading model. We are getting from we have distributing one of the company from US. They are distributing their product in India now.
So it is like the wallpaper business which we are currently doing.
No, it is not a wallpaper. Wallpaper is like more of designing. Okay, so it has a lot of SKUs, lot of things are there.
Okay.
And the solid surface comes in the sheet by say 12 by 2.5 sheets, and mostly 90% white and 3 or 4 colors runs. There is only 10% volumes. So our focus will be mostly on the white now.
Okay. Also, another question on your subsidiaries. Still, all your subsidiaries are making losses. Do you think that in the current year or next year we'll see some turnaround there?
I think we'll see an improvement in FY19. The Gabon subsidiary should show some profits during the current year, and we should see a significant reduction in losses in the MDF subsidiary in Singapore. But yes, I think the major benefits of the subsidiary operations will probably be reflected in FY21.
21?
Yeah.
Okay. Okay, sir. Thank you so much.
Thank you. The next question is from the line of Gautam Behal from Morian Capital. Please go ahead.
Hi, thanks for taking my question. Sir, Mr. Mittal had mentioned in the presentation that the long-term plans in the MDF segment remain intact. So could you just walk us through quickly what the long-term plans exactly are? I assume you mean FY21. And I think previously you had said top line in MDF of 15 to 1600 crores and a margin of 21 to 23%. Is that right?
Yeah. So we had said top line of about 1500 crores and margins of about 21 to 22%. So that's the targets for FY22.
That's FY22, is it? Okay.
That's right.
And I assume when you say this margin profile, are you assuming a lot of the new plant capacity goes for exports as well, or are you assuming that more of it moves for domestic markets?
I would assume that almost 90% of the new plant's capacity would be absorbed in the domestic markets.
Okay. And so then would it be fair to say that the margin assumption is a little bit on the lower side, or would that be reasonable?
No, I wouldn't say it's on the lower side. MDF is basically today a commodity business. So you are not really able to extract a significant price premium from competitors. So we are already seeing the impact of that. And going forward, yes, although I said about 21 to 22% in FY22, but if we have the optimum capacity utilization in both the units, we could possibly achieve margins of about 23 to 24%.
Okay. And sir, do you have a sense of, are we, I mean, if one can use the word, are we the low-cost producer in MDF at the moment when the new capacity runs full stream?
Yeah, sure.
Operating leverage?
Definitely.
Okay. And sir, once this becomes run rate, the MDF segment, what is the ROC that we sort of envisage?
We would target a post-tax ROC of about 20%.
Post-tax, okay. Okay. And sir, next question is on ply from me. In the annual report, it's mentioned that we expect the ply market, the organized ply market to grow about 25% CAGR for the next 5 years. However, we give a guidance of 12 to 15% for FY19 at least. So do we expect the market, our sort of top line to grow much faster after FY19, or how does that connect?
Yeah, I think we'll see only a marginal shift happening from unorganized to branded during the current year. And the shift will speed up significantly over the next 3 years. So that should help us to maintain a significant growth in plywood top line.
Okay, and assuming that this projection does come true, if you can indeed, if the market does allow you to grow 25% in ply, do we have the capacity on stream in the next few years to sort of meet that demand in ply?
Yeah, so we have kept our UP plywood expansion pending for the time being because of, the demand situation. So, but if we have to, we can expand that capacity and bring it online within a period of about 9 months. So that should give us significant, growth over the next 3 years.
Okay. And sir, final question from my side. How do we look at the net debt outlook for the next couple of years? What is the plan to pay back I think it's 650, 700 odd crore at the moment?
Yeah, it's about that. We are expecting a peak debt of about 725 to 730 crores in the current year. And the debt repayments will start in the next financial year. I would say probably, if we look at the repayment terms, we would be repaying about 60 to 65 crores on an annual basis. But if our cash flows are robust, I think we would probably make some prepayments provided there's no prepayment penalty.
Okay. I mean, would it be fair to assume by FY21 at least half that debt can just be repaid by free cash flow, right? I assume.
Yeah. In terms of cash flow, there would be no issues.
Okay. Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Bhavan Chera from Enam Holdings. Please go ahead.
Yeah, good afternoon, sir. 2-3 questions on the MDF side. So, when the competition has increased and there has been substantial price decline, what has been the reaction from the imports? Have they also reduced prices? Their volumes have increased, reduced? Can you give us some idea on that? Because I think over 25-30% of the market used to be catered by imports of MDF. So what's the situation right now?
Yeah, imports have also reduced prices, and in fact, if you look at it, imports have improved their market share from about 35%. They are now probably about 40%, and they have even started spreading material in the northern zone, which was not the case previously. But yes, once we expand our operations at the new plant, we expect imports to decline significantly over the next 2 years.
Right. So, second question, you said you have reduced prices by almost for the 10% from realizations of currently 25,000. Then if I try to do a reverse calculation of operating margins, it would be somewhere between 17 to 19%. When you're saying that your old plant will still be making 21-odd%, so do you expect some areas of cost savings where the margin will be upward of 20%, or where have you taken that number from? Because I think price decline of 10% has happened just in July. So is there a new revision in margin guidance or no?
Okay, so if you look at our operating margins for FY18, they were 28.5% after a currency loss of about 3.5%. So actual margins were about 32% for FY18, and with the price cuts I mentioned, close to about 10%, and some operational leverage in terms of the sales and marketing overheads not increasing in the same proportion as the turnover, there would be some overhead savings. So I think, yes, that operating margin of about 24% is achievable.
Okay. Okay, thanks a lot, sir. Yeah.
Thank you. The next question is from the line of Achal Lohari from JM Financial. Please go ahead. Achal Lohari from JM Financial, please go ahead with your question.
Yeah, thanks for taking my question. If you could help us understand the difference in the segmental revenue, what is reported in the press release and the PPT, is it largely to do with the GST refund? Is that understanding right, sir?
No, that includes, the GST refunds and some other operational income, because there we report segment revenues, whereas the net sales does not include those other operational incomes.
Fair point. But the EBITDA in the PPT for the ply and the MDF segment will include, because that is the other operating income is included in EBITDA. Is that right?
That's right.
Got it. So in that case, if I look at the margin for ply business, it's about 10.6% for the quarter, as against the reported 11.3%. what I would like to know is that how much the saving from the face veneer sourcing change, if you could quantify for the first quarter?
Okay, I include, other operating income in the EBITDA because it's not a one-time income. It's there for available for the next 8 to 10 years because the GST refund for the Nagaland unit will be available possibly till FY24 or 25. So it's a perpetual recurring income, and that's why it's included in the EBITDA numbers. If it was a one-off item, I would not have included it in the EBITDA numbers.
Fair point. I was just trying to make, see on a like-to-like basis, because previous quarter in first quarter FY18 would not have such refund. So I was just trying to...
No, in fact, we had a much higher refund in Q1 of last year because at that point, we were getting excise duty refund, which was much higher in percentage terms than the GST refund.
Do you have the quantum by any chance, sir?
Just a minute.
Sure.
Yeah, it was about 7 crores for the Nagaland unit.
Great. And what about the quantification of the savings on account of the veneer sourcing change?
That will have an impact of about 100 basis points in the current year.
Understood. And so you did talk about the MDF revenue for FY19. Would you be able to throw some color on FY20? Because FY19 would be just 6 months of southern plant. How do you look at FY20 as a whole with respect to the utilization, revenue, and the margins?
I think we would be targeting a top line of about 1,000 crores in FY20.
Okay.
So about 24% margins in the Uttarakhand plant and about 17% margin in the Andhra plant.
Right. And in terms of the volume?
Just give me a sec. Yeah, we will be targeting about 430,000 cubic meters in FY20.
Got it. So how are the realizations for, what was the export volume for the quarter and the realization?
Yeah, just. So exports volume for the quarter were 5,772 cubic meter with an average realization of 16,852 cubic meters. Our blended MDF realizations were 25,131 per cubic meter, and the domestic MDF realizations were 26,700 per cubic meter.
Got it. So, in terms of the gross margin, would it be similar in both south as well as north plant, or could it be substantially different?
It will be lower for the southern plant, at least in FY19 and 20, depending upon the volume of exports. But yes, once we have a significant capacity utilization for the domestic markets at the new plant, the operating margin should be on a similar level for both the plants.
Okay. You're talking about operating margins or gross margins? I was curious to know about gross margins, sir.
Even the gross margins would be lower at the new plant because we expect that exports would be somewhere between 30 to 40% during the current year. Okay. So gross margins will also be significantly lower compared to the Uttarakhand plant.
Understood. Would you be able to give some idea about the realization for the domestic, as in terms of the south plant, how much would be domestic realization typically compared to exports?
Yeah. So domestic realizations at the southern plant would be about 21,850 per cubic meter.
Okay.
And export realizations would be about 15,000 per cubic meter.
And what would be the landed cost of MDF broadly at the coast for imports?
I'll have to check that. I'm not aware of the current prices.
Yeah, because I was just trying to understand, is there a downside risk to this 21,850, the way we are looking at a drop in pricing because of high capacity in north, given a substantial capacity of ours is coming up in south, coupled with other players, would there be a case of a drop in the realization even in case of south?
I think we have taken a conservative realization for both the plants as far as the projection estimates are concerned. But yes, depending upon the level of competition, I would not completely rule out further reduction in prices and margins, although it appears to be low probable at the current moment.
Got it. Got it. And just last question, if I look at the North MDF, you said that basically we are trying to respond to the competition. Would you be able to give us idea about the how much is B2C, how much is B2B, and is it a pure commodity business, or is there a branding which can be of help at least in the medium term?
Okay. Yes, in the medium term, we can definitely look at some branding impact because I think that's probably the only thing which would enable us to have a price premium in the medium and the long term. But yes, at the moment, we are reconciled to the fact that MDF is a commodity business and that we cannot have a price premium over, other competitors.
Got it. Great, sir. Thank you so much for answering my question.
Thank you.
Thank you. The next question is from the line of Kaustubh Bubna from Rare Enterprises. Please go ahead.
When would your Andhra Pradesh MDF unit break even on PAT?
In the current year?
No, current year there'll be PAT loss, right?
Yeah, definitely.
So when would it break even on PAT?
Definitely next year.
Around, but the first few quarters will also be carry forward loss, right?
I think we might at the most have some losses in the first quarter, but I won't expect the unit to have losses beyond the first quarter next year.
So what do you think the accumulated net loss would be from the...
It shouldn't be significant.
Would it be around 20 crores?
Maybe lower. I would say somewhere about 10 to 15 crores.
Okay. So basically this year profitability will be under pressure.
That's right.
And out in this plywood business, 306 crores of revenue, how much was decorative veneers? Because that's a new income stream, right?
It's not a new income stream because our Uttarakhand unit also produces some decorative veneers.
So I'm talking only the Gujarat.
But if we consider both the units, we had about 14 crores of revenues from decorative veneers.
Okay. Thanks. Thanks.
Hello?
Yeah, thanks.
You done with your question, Mr. Bhogna?
Yeah.
Thank you, sir. The next question is from the line of Abhijit Sinha from Pi Square Investments. Please go ahead.
Yeah. Good evening, sir. I wanted to understand the pricing difference between our MDF prices and, the prices of the MDF that is imported from, other countries.
Okay. So if we look at the price difference between Greenply and domestic competition in the first quarter, the pricing difference would have been in the range of about 5 to 6%. And if we compare that to imports, pricing difference would be about 13 to 14%.
Okay, so we are higher in that way.
That's true.
Perfect, sir. And, sir, I just wanted to understand that, our value-added product mix, right? So I wanted to understand how much of the plywood business and the MDF business has a value-added product in them.
Okay, value-add is very low in the MDF segment. It would be about 14 to 15%, whereas value-added in the plywood segment would be about 35 to 40%.
So overall, sir, how much would that be?
At the company level?
Yes, sir.
Say about 26%.
Perfect, sir. And I just wanted to confirm, sir, about the capital with the new plant coming in. How much would the capacity utilization be for this year?
We are expecting 45% annual capacity utilization at the new plant in the current year.
Right. So overall, sir?
So about, it's difficult to, give you separate numbers because it will depend upon the flow of orders to each of the plants. But overall, we are expecting volumes of about 320,000 to 340,000 cubic meters against a capacity of 540,000 cubic meters.
All right, sir. And my last question would be, sir, the distribution network, sir, how much are we expecting it to grow by? So you mentioned that you are planning to grow it, but can we quantify the growth?
Yeah, actually we are trying first to be there in all district headquarters. Okay, so we are 20% of district headquarters. We don't have a dealer network, so we are trying to open that first. You can say we'll be growing around 15 to 18% of distributor network this financial year.
All right, sir. And is there any difference between the plywood between the distributors and the retailer? Like the growth between them?
Question is not clear.
Okay, so the growth between this 15 to 18% growth that you've given, that's just for the distributor level, right? And for the retail level?
That's at the dealer level, dealer level, because we don't have too many distributors in the plywood business because the number of SKUs is not very large. So it's more like a dealer-retailer model in plywood, not exactly a distributor-dealer-retailer model.
Perfect, sir. Thank you so much.
You're welcome. Thank you.
Thank you. The next question is from the line of Alpesh Thakur from Motilal Oswal. Please go ahead.
Hello. All my questions are answered. Thank you.
Thank you. The next question is from the line of J. Radhakrishnan from IIFL. Please go ahead.
Yeah, thanks for taking my question, sir. Sir, I'm still trying to understand this pricing guidance. So you told 8 to 9% reduction. Is that on FY18 price or is that on Q1 FY19 price?
Okay. So it is on Q1 pricing because Q1, if you look at our plain MDF realizations, they were about 4% lower compared to Q1 of FY18.
Because you told this 24% you will be able to achieve based on 28.8% of FY18 and the 8% cut. So if I am making based on 22% and the 8% cut, I am unable to reconcile how we will be achieving 24%. Is there any cost savings which you are planning?
No, you are looking at an reported EBITDA margin of 28.5%, but that was inclusive of currency losses of 3.5% on borrowings for the new plant.
No, sir, I am seeing on Q1 margin. Q1 margin is 22.1%. No, is there any currency loss there also?
Yeah, there's some currency loss there also. So if we exclude the currency loss, the margin is 25%.
Okay, the margin is 25% excluding that. So that's why I'm trying to understand this 25% if you're taking a 8% cut. So how for full year it can become 24%? I am trying to understand that.
No, it will depend again because if you look at the volumes, there was a 30% drop in volumes in the first quarter, and that's the primary reason for the fall in the EBITDA margins. It's not because there has been any significant reduction in the gross margins. In fact, if we do a like-on-like comparison, gross margins have improved by 60 basis points in the first quarter compared to the corresponding quarter of last year. So operating margins have fallen primarily because of the fall in volumes. If we take the price cut and that helps us to improve the volume significantly, that will enable us to maintain the EBITDA margins.
Okay, and secondly on this 700 crore guidance on the revenue, sir, I am trying to understand that also. So for this quarter, we have done 91 crore of revenue. So that means that from next quarter, the run rate has to be around 200 crore. So out of the incremental volumes from the current quarter, how much you are targeting towards exports and how much it could be domestic?
So we will be targeting about 100 to 120 crores for the export markets and the balance for the domestic markets.
Okay. Just trying to understand whether the domestic market can absorb that much, whether that much of robustness in demand you are able to see?
Yeah, I think it can happen, although, maybe we could be delayed by a quarter in achieving our targets. But at this point of time, I think it still can be done because after the price cuts, we'll also be in a significantly advantageous position as compared to the cheap plywood segment. And that would enable us to make deep inroads into that segment. So it's not just competing, against other MDF producers. It would help us to increase the market significantly for MDF.
Okay, sir. Thanks, sir. Thanks a lot.
Thank you. The next question is from the line of Nitin Bazin from Ambit Capital. Please go ahead.
Yeah. Sir, very briefly, just following up on a few things. One is that if you look at, the sales of ply, how much of that was outsourced in this quarter? I may have missed from the presentation.
Yes, sir. So out of our total sales of 306 crores in plywood, outsourced volumes were 87 crores.
87 crores. And is that largely for the mid and the low category or only low category?
It's mid and low. It's significantly mid and very small quantum of low.
Okay. Sir, and the second question was in terms of the, you're talking about MDF, we are talking about the increasing competition, about competitive pressure in the MDF. Recent market channel checks suggest that there are some 3-4 players who are putting up mini MDF plants in the country. The question was that in ply, we saw a lot of small players come in, but in MDF, the game was supposed to be between top 3-5 players. But now we are hearing that even mini MDF plants are most likely to come up. What are you seeing in mini MDF plants competition, and how are you seeing beyond the top 3-4 guys, what is the competitive landscape of MDF in the next 1, 2, 3 years?
See, I think the history of MDF in the country can give a pointer, to the mushrooming number of MDF players. If you look at the past, there were a number of players apart from Green and Action If we look at the others, they have always remained small and marginal players, operating at with very small capacities and very low capacity utilizations. So probably our MDF margins have attracted a lot of competition, but then probably they will over a period of time realize that you can't be economical in terms of cost if you're going for small capacities in MDF. So yes, definitely there will be new entrants coming into MDF, but we'll have to see whether those are sustainable.
Okay. So your channel check suggests what kind of capacities are in the next 2 years, 3 years to come up in India in MDF?
I think most of the capacities have already come into the market, and now with the competition coming in, I've already heard news from some of the competition that they have postponed their plans to expand in MDF. So that could possibly also happen with some of the organized players who have, mentioned plans to enter into MDF. The price competition in the market at the current moment may deter a lot of competitors from actually venturing into MDF.
Okay. Sir, you also mentioned in the call somewhere that by the end of the year, the company would be possibly having 2 entities. What is the indicative debt split for the 2 entities at the end of the year?
So we would have about 200 crores of debt in the plywood business and the balance in the MDF business.
Okay.
So plywood is predominantly working capital because we have not done any major expansions in plywood during the last 3-4 years. And MDF, it will be more of long-term borrowings because of the Andhra plant.
Okay. Sir, last year your cash flow from operations was halved from FY17, just about 110 crore rupees of cash flow from operations as compared to an EBITDA of 210 crores. This year also with the working capital having gone up in the first quarter, it looks like CFO generation this year would be also very weak.
Yeah, I don't think, that we should make an assessment of a full financial year just on the basis of one bad quarter. Yeah, definitely the low volumes in MDF will have had a significant impact. And like I mentioned again at the beginning of the call that, although we have seen an increase in inventories, we have not seen any increase in debtor days in MDF. So I think once the flow of orders moves up and the inventories go down, we should see improvement in the working capital situation. I would have been worried if, the debtor days has gone up. But since that has not happened, I think this is a temporary situation. The increase in inventories is a 1 quarter impact, and we should see a significant reduction in inventories going forward.
The last question for Rajesh ji. About, sir, realizations in this industry. If you look at Greenply is the leading brand, and despite that, in the last 5 years, the realizations of ply haven't moved up. And now MDF realizations are also coming under pressure. So the story which has been of, branded building materials, upgrading by the customer, or let's say premiumization of the product, will it ever happen in ply? What is your point of view?
In fact, if you see there's true in last 5 years, there is not a significant increase in the price in our premium product category also. Okay. Number one. Number two, if you see though, we have done a lot of cost reduction measures, and we really don't want to increase the price in the big way in the market as well.
Okay. So basically, then you are indicating that it's largely a cost game and not a pricing game in the future also.
Yeah, because of the demand situation, what he was saying is that the raw material prices have also come down, which has helped us to maintain the margins.
And in fact, we have increased the production capacity. We are buying a lot of mat ply to increase in our premium category of product. They're also helping us to maintain our cost price.
Sure, sir. Sir, thanks a lot.
Thank you.
Thank you. The next question is from the line of Ajay Srivastava from Stewart and Marketage. Please go ahead.
Thank you, sir. I have two questions. My first question is related with your...
Excuse me, this is the operator. Mr. Srivastava, we are unable to hear you. Can you speak closer to the phone, please?
Thank you, sir. My question is related with the MDF segment. As you said that volume has gone down due to price cut. Can you share with us the geographical revenue contribution in MDF segment? Means east, west, north, south, and in which segment it has gone down?
I'm sorry, I'm unable to hear the question.
Sir, I'm asking that in MDF segment, can you share with us the geographical revenue contribution in this segment and in which segment it has gone down?
Yeah, you mean the geographical distribution of the MDF revenue?
Segment. Yeah.
So it's about...
and in which it has gone down?
Huh?
In which segment it has gone down?
Yeah, it's come down primarily in northern India.
Northern India, okay. And as per your presentation, your utilization is 100% for FY18. So what do you expect for FY19?
Ladies and gentlemen, there seems to be a disconnection from the management line. We request you to please stay connected while we have the management reconnected. Thank you. Ladies and gentlemen, thank you for being on hold. We have the management reconnected. So over to you, and we have Ajay Srivastava in the queue awaiting for his response. Thank you.
So my question is for FY19, for FY18, your MDF utilization is 100%. So what do you expect for FY19?
Like I mentioned, we are targeting 3,20,000 cubic meters of MDF sales against a capacity of 5,40,000.
Okay, thank you, sir. My second question is, yeah, please go ahead.
So that would be about 60% capacity utilization blended for both the plants put together.
Okay, thank you, sir. My second question is with your Gabon plant. Can you share with us the capex, total capex involved in this plant and how long it will take to complete it?
So, compared to the capex we have incurred up to the close of FY18, we will be spending another $5 million for the capacity expansion. And part of the expansion will be completed in the current year, but the full capacity utilization, full capacity expansion will happen in the next financial year.
Yes, thank you.
And it's from the current capacity of 36,000 cubic meters of log spilling to 96,000 cubic meters of log spilling.
Thank you, sir.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss. Please go ahead. Sneha Talreja, your line is unmuted. Please go ahead with your question. As there's no response from the line of current participant, we move to the next question from the line of Vaibhav Shah from ICICI Direct. Please go ahead.
Yeah, thanks for the opportunity. So, sir, you mentioned that we have kept on hold our plywood expansion at UP unit. Hello?
Yeah, that's correct.
Yeah, so, sir, despite that, we would be able to achieve 12-15% growth in plywood this year?
Yeah, definitely. Like Mr. Mehtal mentioned, what we have started doing, what we had started in FY18 and which we are increasing in the current year is we are buying the matte plywood from unorganized plywood manufacturers. Basically, it means just the core plywood without the face veneers.
Okay.
Then these are brought to our factories, and after that the face veneering and the finishing is completed at our factories. So that has helped us to, improve the capacity utilization at our plywood plants.
So what kind of utilization will we be expecting for this year, FY19?
I think we would be expecting close to about 120% capacity utilization.
And what would be the trading volumes for FY19?
Trading volumes, I think we had about...
close to 15 last year, 15 point.
So we should be doing about 20 million square meters in the current year.
So we are basically replacing the capacity that would have got from UP plant through high utilization at existing unit and through trading.
That's correct.
And so by when should the new plant come in? FY20 or?
FY20.
Yeah, FY20.
Okay, thank you.
Thank you. The next question is from the line of Abhijit Sinha from Pi Square Investments. Please go ahead.
Yes, sir. Hi. I wanted to understand that we are taking an asset-light model in the plywood business, right? So I wanted to understand, sir, what is the benefits of the outsourcing and by how much are we outsourcing it by? Hello?
Yeah, the primary benefits of outsourcing is that it's enabling us to increase our volumes in the premium segment without any fixed capital expenditure. And this we are doing on a very selective basis, from producers who are able to manufacture according to our specifications and quality, so that there is no negative impact on the Greenply brand.
And in fact, it is outsourcing. We are not buying for our premium product the full plywood. We are buying, as I have mentioned you, the matte. We have introduced 2 years back matte process in our factory, matte process in our plywood plants. So we are buying the matte process, then we are putting the face veneers and the sanding, finishing line we are doing at our plant. And the vendors whom we are buying the matte, we have installed all machineries, whatever we require to maintain our quality.
Okay. So what does you increased the outsourcing from 22% to 30% is mentioned in your presentation. What would that mean exactly?
No, what we have mentioned is that over the next 2 years, we were targeting that outsourcing should be about 30% in value terms.
Okay.
So,
and in fact, the outsourcing, we are entering in the lower end market also. That will also be our outsource product.
Sure. And I just wanted to understand, sir, the Gabon plant, you've given the figures of how much capex we have done. So when do we see this further capex, resulting into numbers, and how much could we quantify that? Like, what would be the benefit of this expansion?
During the current year, we are targeting volumes of about 55% capacity utilization, which would give us net revenues of 77 crores. By this, I mean that these would be exclusive of exports to Greenply for the internal consumption. And in FY20, we would be targeting about 120 crores of revenue from the Gabon plant. Excluding the internal sales.
Okay.
And we would target the peak in FY22 or 23, which will be about 175 crores.
Okay. And sir, this increase in 60,000 that has happened, so that would be seen in FY20 or FY22?
No, the capacity expansion will be completed in the next financial year, but the peak capacity utilization will happen in FY22.
Perfect, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sriram Rajaram from Sundaram Mutual Fund. Please go ahead.
Sir, for the AP plant, at what level of utilization will be at EBITDA break-even?
At about 55%. Oh, no. You're saying at EBITDA level. We will be PBT break-even at about 55%.
So these are all taking into consideration a realization of 22,000-23,000, if I'm right, sir?
Yeah, about realizations of about 22,000.
Yeah. Fine, sir. Fine, sir. Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for the closing comments. Over to you, sir.
Thank you, friends, for taking out time to attend the Greenply Q1 results call. And we look forward to speaking to you again for the Q2 results. Thank you.